Hello, my name is Steve Bigelow with the Candlestick Forum. We're seeing a little reversal, whether it's a bounce or a reversal, we don't know yet, but we can take advantage of it with some very strong patterns. Today, the Dow, in preparation for the Fed meeting, traded up most of the day, and you can see it whipsawed quite a bit. So we know we're in a consolidation stage because we're down here in the oversold area, and we're starting to see some buying. That puts us in a much more analytical factor as far as if it opens positive tomorrow, anticipate they're bringing the markets up to test the T-line, especially coming out of the oversold area. If they continue to trade at lower, the downtrend remains in progress. But the probabilities right now say at least there's probably a bounce in store. So again, the NASDAQ doing the same thing. It did a bullish Harami hammer type signal, followed by a gap up today, oversold condition, making the likely target up here at the T-line. That doesn't necessarily mean we're back in an uptrend. That means at least when it bounces up to the T-line, see whether it's going to act as resistance or whether they're going to go through. Even though this is maybe a temporary price reversal, we've got some very strong patterns. Gas has a classic pattern. A classic pattern is a fry pan bottom. And what do we expect coming out of a fry pan bottom? A strong price move. Then you can see how it pulled back doing a J-hook pattern. What's the prerequisite for a J-hook pattern? A strong price move. Look at the additional confirmation. They couldn't close below the T-line. You can see the J-hook. This makes for an extremely high probability wave 3 if it opens positive tomorrow. Same scenario on JD.com. You can see the big fry pan bottom, the price move, the pullback, did a kicker type signal. High probability that it's at least going to come back up to this level. Whether that's a big percentage move or not, it allows the candlestick investor to put on the strategies that are going to be the most profitable. In this case, it might be a bullish call spread. And if we can add additional confirmation to our pattern, as in Rite Aid, fry pan bottom failed right smack dab at the 50. Pulled back, doing a J-hook pattern. If this opens positive tomorrow, we've got a classic pattern with a bobble breakout. A bobble breakout is just a J-hook pattern that you can see where everybody is watching to see if it's going to act as resistance. And when it goes through, we can be buying immediately because we know everybody and their brother is going to be watching to see what happens here at the 50. Giving us a high probability trade of a bobble breakout heading into wave 3, the same magnitude as this move. Our recommendation though is ABCL. Notice how it did a fry pan bottom, did a little J-hook right smack dab back to the 50 and the T-line, trading positive. You can buy this one on positive trading with the expectation of a strong price move. I think the 200-day moving average is up at the $12 area. But again, this is just an accumulation of investor sentiment that we recognize as a pattern combination we call the classic pattern, where you have a fry pan bottom followed by a J-hook, produces extremely high probability results. Also, want to just kind of announce to mark your calendars, we're going to be doing a day trading training on Saturday, June 25th. These are usually last from 10. They're supposed to be ended at 2. They usually go to 3 or 4. But this is where you can get some very fine-tuned analysis, whether you're a day trader or you want more specific entry strategies as a swing trader. The pattern combinations like the bullish flutter kicker signal or the doji sandwich all provide high probability day trade entries. So join us. That'll be it. We'll see you in the chat rooms.